Good afternoon. Welcome to Markets Today. I'm your host, Mbithe Muema. Co-hosting this show with me is Mr. George Bodo. We have a lot lined up for you today. It started off with KCB announcing its first half 19 results. Profit after tax was up 5%. We shall be dissecting these numbers as well as sharing our interview with the Chief Finance Officer, Mr. Lawrence Kimathi, later on in the show. Aside from that, what's happening on the NSC? Turnover is at 470 million shillings. This compares to yesterday when we were shy of touching 1 billion shillings worth of turnover. The top trades there, Safaricom. 10 million shares traded at 28.6. I keep missing this bus. I just never think that it's going to go over 28. Now it's over the top. There's a lot of demand coming into that stock. We'll keep you updated on who's buying and who's potentially selling. The other key trades that have happened, BAT and EABL. Seen a slight price weakness on EABL. It's traded at about 200 shillings. The last traded price was about 203. So slight weakness happening there. What do we have lined up for you? Remember, we're talking KCB. That's the biggest news of the day. We're also talking about real insurance. What's happening there? What's happening in the consolidated bonds? In the bonds market, corporate bonds market. Taking a look at real, there was a corporate action that came out earlier today. Also, we are taking a look at the government of Kenya. It was in the market yesterday for a 10-year and a 20-year bond. CBK announced the results in the evening. What was happening there? Was anything out of line? And more so, how is liquidity looking and where are investors looking to place their money? And of course, we cannot finish this show without giving you an overview of what's happening in the global equities space, what's investor sentiment looking at, and what does this mean for the Kenyan market? So, George, let's start this conversation. I know you're dying to get into KCB, but I don't want us to talk about KCB for now because we will have a lot of time to talk about KCB. Let's start off with the Central Bank of Kenya results on the 10-year and the 20-year papers that came out last night. Did you have a look at that?
Yeah, I had a look at them, and it's a big move. If you look at, for instance, the 10-year, and we talked about 10-year yesterday when we were discussing fixed income. 10-year now has become the short-term paper, and we could see that from the results yesterday.
Okay.
The yield at which it was sold was down 80 basis points. The last time the central bank sold the 10-year was in April 2019. It was sold at about 12.3%.
Okay.
Yesterday they sold a 10-year at 11.5%.
11.5% is the return that you're getting for 10-year paper, giving it to the government. That's pretty low, but also expected, because I think the last 2 days we've had different analysts from different houses, and they were sort of anchoring at 11.6 for the 10-year. So it's certainly a huge drop from the last reference point, but it was in line with the market. George, what I found interesting was actually the appetite for this paper. So the investors put in
massive
about
appetite.
56 billion shillings worth of bids, and the central bank only accepted 45 billion worth of bids. So that really attests to the amount of liquidity that is out there.
And actually, if you look at the entire auction system, the central bank actually eventually rejected about 8 billion shillings.
Yes, it did.
Of bids.
It did.
I don't know why, but it's probably, my guess is they were probably very aggressive on the price side. But coupled with the fact that there was also another maturity coming in this month of about 31 billion shillings.
Okay.
That the liquidity, the high liquidity that we keep talking about in the system is certainly set to continue for the rest of the month. We are likely to see bond prices. That bond price rally could still sustain. Could still be up. And interesting how this will translate in the secondary market. We'll probably like to see secondary market bids. As you know, the secondary market bids for the 10-year probably will likely come below 11%.
So let's wait and see.
Yes.
Okay, so one reference point, the 10-year 11.5%, that was the interest rate for the accepted bids, and the government took about 46 billion shillings worth of bids. On the flip side, the 20-year, only 14 billion worth of bids were there.
There was no demand.
The interest there, the demand was quite muted.
And you could see the performance to a 9% performance rate, just shy below 15 billion shillings worth of bids.
Okay.
Central Bank accepted about 12 billion shillings.
It was 14 billion shillings. They accepted at 12.7%. I think that again was also in line. I think the reference points we were hearing were 12.6%.
But it was also a slight move. You could see there was a slight move. 20 basis points from the last auction of the same paper in April last year.
Wow. But
generally what this shows from yesterday's results is that there's an imminent, not really an imminent, there's actually an unfolding bond price rally that we don't know where it's headed.
Capital preservation is key, and I mean, you're getting 10% for 10 years from the government of Kenya. I mean, yeah, that's not very attractive.
Good news for banks when yields keep going down.
Exactly.
Because now banks, the returns they're getting from the papers
They're much less. They will, at this point, they will certainly be forced to lend. But it's interesting, George, because a while back we were talking about Nigeria and what the Central Bank of Nigeria is doing. So the Central Bank did compel the banks there to be able to extend credit by giving them a reference point of their loan to deposit ratio, 60%. This is the minimum that you must have on your books. Yeah. So it's forcing everybody to actually lend. And interestingly, today I was speaking to a couple of investors and they're saying they actually thought it was hot air, but it's been implemented and they are forcing by law the banks in that country to actually extend credit. Conversely, I think for Kenya, there's no law that's been passed, but in a soft way, the central bank is saying, it's okay, if you don't want to lend your money for 10 years, we'll take it from you for 10 years at 10%. Conversely, you can actually extend it for 4 years or 5 years for 13% to the market.
Yeah, and we've seen that moves. I don't think that it will go for some time, because remember earlier this week we were discussing the fact that the National Treasury has asked parastatals to wire back excess money they're
single
sitting on,
treasury
right?
account.
Now, what they're saying is that, well, essentially what they're trying to eliminate arbitrage. Okay. Whereby banks are warehousing these funds, right? And banks are using these funds, they're borrowing these funds from public sector entities at nearly zero rates, but lending the same back to central government.
You bring on a very interesting, because now I think for me the question I need to answer, or I would potentially look for somebody to answer, is where is this liquidity coming from? Is it coming from the banks, or is it coming from the pension funds, or is it coming from the insurance companies? I think because if it's coming from the banks, then it certainly alludes to the element of the government forcing the parastatals to actually deposit excess monies with the Central Bank of Kenya.
And actually, if this happens, if that directive happens, actually we will see some liquidity getting out of the system. It could actually occasion some tightness. Yes. And if there's some tightness in the liquid market, I think the rates, the way they are, could certainly start an uptick. There'll be an uptick in rates. Okay. Because then funding short-term positions would actually be very expensive.
All right, let me circle this conversation. So 20-year is at 12.7%, 10-year is at 11.5%.
Look at that difference.
That's the reference that you
But also we discussed yesterday that it's actually not fundamentally driven.
Yes.
It's actually a more
it's liquidity.
Action. Yes.
Fair enough. So liquidity, but those are the two
across the Atlantic.
Yes, George. Those are the two. Yes. Those are the two reference points. But now let's park the public debt. Let's get into the private sector. There was a corporate action and an issuance to investors and shareholders of real people. What was the underlying message that actually came out of it?
So I think we have two corporate notes, the corporate issues that are going through financial stress. And this is Real People, which is a microfinance insurance company, actually. So a microfinance company that actually is registered in Mauritius. Well, the whole it's a bit of a composite structure. The holding company, which owns the company, is registered in Mauritius. The majority shareholder is based in South Africa, so we don't know where it's at. Okay. But anyway, the point is, Real People has been undergoing through some financial stress, and they have been unable to meet their commitments. Actually, they've been unable to retire some notes that were due in August this month. Okay. They will likely not retire them because they don't have money.
Do you have a sense of how much the outstanding amount is?
So it's just something about close to $1 billion shillings.
$1 billion. Okay, that's not positive for the current issuances that are actually in the market, because we've seen Musoni in the market, we've seen Remu indicate that he also wants to come into the market, and also certainly for Consolidated Bank, which also has similar problems.
Consol is another one, $3 billion.
$3 billion. So $3 billion on one end, about $1 billion on the other end. Okay.
So the underlying thing is that the companies are not doing very well.
All right.
And now they're seeking to restructure the notes. And I think we saw in Real People, one of the resolutions they shared with the investors is that they've been able to extend some maturity for the 3-year note, which was due in August. They've been able to extend it to from August to February 2020.
Oh, the corporate bond market is done.
But it's a contingent on them getting a strategic shareholders.
George, it's a tombstone. We're just going to have a little tombstone outside of the NSC head office and say, this is where we were. Corporate bonds, they lived here, rest in peace.
But I think the market can actually come back if the restructuring.
Okay, George, there's so much to talk about. I wish we had more time. But let's move again. There's also something that interesting that has come out. The Capital Markets Authority has come up with a notification for the first green bond ever. Acorn will be actually coming into the market to look for funding from sophisticated investors. What are your thoughts? Yeah, they're calling them
sophisticated
investors. Keyword.
Well, it's a restricted issue. Essentially, means they cannot give it to. I think the maximum people they can sell is restricted. Usually, you can only sell to a maximum of 100 people. Okay. And this beyond 100 people, it's considered a public issue.
All right.
And
so then, why the name green bond issue?
Well, it's supposed to fund initiatives that are climate positive.
Okay.
Yeah.
So Aecon is pushing,
yes.
rather Aecon wants to be able to build environmentally friendly housing
yes.
units.
Actually, they're actually doing student accommodation.
Student accommodation.
Environmentally friendly student accommodation. Friendly. I don't know how student accommodation can be environmentally friendly, but
more importantly, would you actually take a lesser premium just because it's a greenhouse bond?
I'm not sure. But also, I was just wondering, who actually monitors the compliance that it's actually the project that is being financed?
I hope it's not the Capital Markets Authority.
I certainly don't think it is them, because I don't think they have capacity to develop capacity to.
But it's a new product. It's a new product. You must give it to them that at least they are launching new products.
The issue is also partially, I think it's partial guarantee from Guarantco, which is a form of credit wrap. So it's I think Guarantco has given a half guarantee that essentially what it means that if Aecon defaults, then Guarantco will pay half of the bond. Half of the bond. I think, so at least some security there. So let's see the pricing, because some of the issuances that we are seeing, I think a while back, one of our guests had actually intimated that Musoni was in the market and the rate they were looking at was 15%, give or take. So it would be interesting just to see where the sophisticated investors price the risk on this particular issuance. But it's a good move for sure. I think beyond the greenness of the bond, I think the market will still premiumize it. Okay, let's wait and see. So the second last element of our chit chat, global markets. Yeah, it's not looking good. I mean, yesterday S&P tanked, you know, and it's all becoming, I don't know, there's so many things, there are so many moving parts in the global space right now. We have a build-up of military assets just close to Hong Kong. We just don't know what's going to happen in Hong Kong. China building up military assets just close to Hong Kong. We have Argentina. But the resilience and persistence of the protesters. By the protesters. You've got to give it up to them. 10 weeks. Yes. I'm very impressed. 10 weeks. You've got to give it up to them. And it's silent. There's no violence. It's non-violent. Staging like we're just in the national airport.
Exactly.
You know, cancellation of flights.
Wow.
But there's a big concern actually that it could actually become ugly. So a couple of geopolitical concerns going around. If it gets ugly, U.S.-China trade wars. Translate to asset prices, U.S. trade, we know. U.S. trade wars, currency wars. Okay, interesting. So I think for China now coming up and say they will retaliate, we don't know what they'll do. Exactly. Yeah. But I think, I mean, for me, when I'm looking at this kind of information, all the time I just keep looking at our currency against what it's trading against the U.S. dollar, because that actually dictates whether you continue to see increased capital inflows or outflows. And then the second thing that I tend to focus on is on Safaricom. So Safaricom is at 28.6. It's actually net bias. 28.65. And it's actually net capital inflows coming in. So that just doesn't give me jitters, but it's very important just to have an overview of what's happening. Let me give you a shocker, Mbithe. Today I just learned that there's about, actually it's statistics from Bloomberg, there's about $16 trillion of debt that is yielding negative. Yielding negative? Yes. My goodness. And George, you're saying 11.5% on the 10 years back? $16 trillion check yourself. Check yourself. Don't be that person who sits in Africa and controls their mindset just based on a narrow mindset, rather. Don't be narrow-minded. So 11.5% is good on the 10-year. So ladies and gentlemen, you can see we have so much lined up for you. But the highlight of the day, KCB held its investor briefing earlier today at the Serena Hotel at 7 in the morning. Profit after tax was up 5%. Now, the investors we were speaking to and the analysts we were speaking to expected anything between 10 and 13%. What happened there? Provisions actually increased by a huge sum, 266% year-on-year to 3 billion. Now, for this and more, actually, we'll take a short break, but then join us because we had a sit down with Mr. Lawrence Kimathi, who's the Chief Finance Officer, and George and I will also be dissecting those numbers just to give you a view of what to expect going forward. We take a short break for daily commodities. Don't go anywhere.